our weekly Masterminds webinar. We're going to have about, I'd say 10 new people tonight, so welcome to all you the new people that have come in from around the world. We're going to talk to you probably for 45 minutes to an hour is about usual. Tonight I've got with me Shaun Downey. Welcome, Shaun. Are you there?
Yep, I'm here. Hi, everyone.
Tonight we're going to chat to you about what's been happening over the markets this week. We're going to have a look at some of the codes that came up and the positions that were taken. We're going to have a bit of a look at our run through each of the major global markets that we do usually each week, just to update everyone on any changes that we're seeing. And we're also going to talk to you a little bit about any technical highlights that we've seen through the week going on in the market, and we'll probably have a quick educational session where we'll run through maybe one or two features of the software in depth so everyone can get to see us talk about it in real time and ask questions as well. And we do really recommend that you ask questions, and there's going to be a question box there, so feel free at any time, perhaps at the end of the webinar, or even if you want to ask questions in the chat box through the webinar, and we can try and answer those as we go. So welcome once again. We're really excited to have you on board. And before I go on, I guess I'd like to talk a little bit about first of all who we are and why you should listen to us. And so Shaun, do you want to tell us a little bit about yourself?
Yeah, quickly. Started in 1979 at 16, so traded. Started in the commodity area for 4 or 5 years. Then I was head of FX, spot market making, trading forwards. Moved into financials, 2 years trading T-bonds. Went to Australia, head of treasury for Speedo Swimwear, Foster's Beer, Gestetner, global interest rate currencies. And then run various private funds over the years, some of it in futures and foreign exchange, some of it in equities. Wrote technical commentaries for 7 years, my own business, and taught and mentored technical analysis for the last 25 years, really. So written a couple of books. First book, Trading Time, is what the basis of this is, trading safely, and then mapping is much more for beginners. It's really shortcuts for beginners. You can go on a real merry-go-round of conflicting people saying different things, and I sort of cut through all of that and say, well, this is the fast track to learning about markets quickly. So that's what the second book's about. And the third book I actually finished yesterday. So gone through the edits with David Kamish, one of our apprentices. So thanks to him for going through my horrible grammatical errors. And so that's basically, that's me in a nutshell.
Well, thanks for that, Shaun. And just a bit on me. I've been a professional trader now for 15 years. I've been lucky enough to work with Shaun for the last, 4 or 5 now, Shaun?
Something like that, yeah.
And and prior to that, I worked at Optiv Australia, which is a proprietary trading house in Australia. $100 million for them. And since then, I've been working with Shaun developing this software, and I spend a lot of my time up at Port Stephens, and just looking forward to sharing our software and our thoughts with you tonight. Before I go on, it's probably important, it's very important that I share this disclaimer with you. So if you'd all like to just quickly cast your eye over that disclaimer, it's important. Shaun, how's the weather in the UK? I've lost Shaun. Shaun, are you there?
Yeah, sorry. It's pretty horrible. It's snowing, would you believe? It's been a pretty grim.
I've heard Europe's going through a deep freeze at the moment.
Yeah, it's global warming, mate. You know, no, climate change. God, I didn't say global warming, did I? It's climate change. Got to get it right. Yeah, it's been freezing in Europe. You know, it's don't even start me on it, really. I mean, once they start taxing you on global warming, then they just have to keep on perpetuating it. So I think there's a few studies out there that sort of, well, it's a very emotive subject. I think you get the idea what side I'm on. So if a politician says that something's is something, then I think they're the makers of all the fake news, aren't they? It's quite funny that they start complaining about fake news when they've been the architects of that for forever. So anyway, I think we'd better get back to the markets there, otherwise I'll go on a bit of a rant. It's a bit early on a Sunday morning for a rant.
And look, just for all the new people that are listening in for the first time tonight, look, we really do cater for advanced traders and beginners, frankly. And I guess I'd just like to point out to you exactly what it is that we do for our clients. You know, the software that we've written can be as simple or as complex as you like. We've developed it so that you don't need to have any experience to use it. And certainly it is very easy to use if you are just using it for an execution purpose. Certainly Shaun and I, we go through about the computer runs through about 7,000 markets each day, and we go through each of them one at a time, and we basically cherry pick the signals that we think are the best ones that are going to deliver results. So it's probably a really good piece of information to understand that not every signal that you can see in front of you, all those little blue diamonds that are pointing up or pointing down, they're buy and sell signals. We don't take every signal. This is not an automated program where you just open up any stock, see a buy signal and you act on it. It couldn't be further from the truth. So what the signals are designed to do is occur at support and resistance. For anyone who's new and doesn't understand any of the jargon, if you are on our Inner Circle Facebook site, there's lots of commentary now on sites where you can learn about the jargon, and I'd encourage everyone to do that. So that's an important point. So you know, for Shaun and I, each day we run through the American stock market, the Australian stock market, German stock market, the UK stock market, and the futures stock markets. So the futures markets, and the computer tells us where to look. And essentially what we're doing is the program runs around the world and finds out markets where prices are stalled at a support level or a resistance level, and then the next day it gives a buy or sell signal, so that we always know that we're dealing at, we're buying at support and we're always going to be selling at resistance. So that's an important piece of information for everyone to understand. And by doing that, what we're doing is we're not chasing markets. So we're always waiting for the market to come to us rather than chasing after new highs or trying to sell into new lows. And look, we are offering, if you're interested and you want to get on board and you just want to have a chat, if you look into the chat box, there's going to be a link where you can leave basically your contact details, and we're offering a 20-minute consultation if you just want to have a chat about what it is that we do and how we could help you. So feel free to click on the link that will come up in the chat box at some stage shortly, and leave your details. So I guess this week we might just start with some of the codes that popped up this week. I think it's fair to say equity markets, and I made this comment in the online Facebook community group, that at the moment with equity markets, it's pretty apparent that time has become the more important factor rather than price, in the sense that the many markets that we've been seeing this week in equities have been going sideways particularly the leading sectors, which we covered, being the financials. So, there's been quite a very limited number of signals this week, and in fact, the market hasn't done a lot. In my experience, when we get to these sorts of episodes where time needs to evolve, then generally very little does happen, and essentially we could be waiting till maybe as soon as this week, but if not this week, then certainly the end of the month, we should get some more direction on the equity market. It's certainly poised in a position where it could easily pull back, and we've discussed this at length over the last few weeks. The Dow in particular has been up for 7 years now. Sevens are often associated with pullbacks, despite the fact that the larger trend can resume. Some of the banks are up 7 months and 7 weeks consecutively, so very overextended despite a very strong underlying trend. So, if you said, okay, yeah, the market got higher still, but right now, it's time that we're waiting for. Isn't it?
Just a couple of things there. It's also, we've started earnings season in America, so if we do get any signals, we always check to make sure whether there's nothing coming out within the following week. But this week, financials are one of the early ones. So we've got JP Morgan, I think it's Morgan Stanley and Goldman Sachs early in the week. And those stocks have all done very well recently. So I don't really care what their results are. I don't care at all, to be honest with you. But what I am interested in is whether the results are better than expected, and let's say the price goes down. So it feels like everybody's long those stocks. So is there more fuel, even if they do produce good results, to send it higher? So we'll be keeping an eye on that. The other big one this week is Netflix, which I think is on Wednesday. So, and that's also trading at all-time highs. So again, financials are a crowded trade. We've talked about sectors before. Financials remain in the top 6, 7, in spite of not doing very much in the last couple of weeks.
That Netflix looks like it's gone on and made a new high last week, Shaun. So,
yep.
If I just go back to JP Morgan, that was interesting. Just for any new watchers, down the bottom is really a map of where we think prices are likely to at least pause, or if not reverse. And what it is showing you levels in time, and the different colours reflect different time frames. And so with JP Morgan, it's made a new annual high coming out of 2016, and right now it's compressed between last year's high and the closing price. So as we said, it's been up for 7 months in a row and 7 weeks in a row. So any snap down here could move quite quickly into supports that are reasonably distant. We've got some initial supports sort of $10 away, so we could see a short sharp move there. Shaun, what do you think?
Yeah, I think, as I said, I think everyone's already long. So it could well be that the results are good. What typically will happen then is there'll be a knee-jerk higher. It might be in the after hours trade. So I actually look at what it does after hours. So if it's Netflix, for example, I would see there's a very short session. I would just see there, and then it's what happens when the proper market opens the following day. Got to remember JP Morgan and Goldman Sachs, I think they come out before the market opens. And so that can cause some volatility in the futures markets. So the S&P 500, the E-mini and the NASDAQ could suddenly start jumping around all over the place. But there is a pre-market, there's about half an hour before the market opens where that will trade. And I like to just see what it's done. And then as soon as it opens, the first half an hour or so is pretty important. If we had an existing position, then we'd be making decisions about whether we got out of that position ahead of it. For example, if you were long on JP Morgan, it's given you a few exits recently. And you've got a trailing stop there, which is that brown line. So, yep, just have to see what happens. To see that you've called up Amazon there, Amazon's interesting in that red line, which is a monthly line, has moved to the top. So from the high that was made back in October. And so Amazon and Google are one of the later ones in the earnings season. That's probably, I think, I could check exactly how far away. It's probably at least 3 weeks away before they are actually coming out. I'll just quickly call it up. But that would be one of the typical things that happens is a lot of commentators and the media, and I'm not going to name names, but some of the more professional guys will know. So quite often it gets pumped ahead of their numbers, and people get involved in head, oh, we think the numbers are going to be better. And then, of course, it doesn't matter what the numbers are. They could all be long, and then they all have to get out. It's interesting. Amazon is January 26, so not that far away. And Google is... Google's Jan 26 as well. Yeah, I thought so. Normally the same day. So what normally happens is once they're out the way, everyone gets bored with earnings season, and so it has less and less impact on the overall market. So I'm just going to check Apple. Apple's January 31. So once Apple's out the way, that's pretty much it, which is good. That means that the earnings season is probably condensed into about 2 weeks. Sometimes it can drag on.
Just for the benefit of the new listeners, Shaun, you mentioned that the monthly red line cursor is on moved up above price. Do you want to just maybe touch on what you think that means, and when people see that, what they should look for? Right.
Well, there's two things really. The monthly line, which is on top of the chart, which is Jeremy's highlighting, being the highest time frame that's actually overlaid on a chart, as opposed to time area underneath, which goes up to annual levels. So this is the highest time frame support or resistance. So it's the most important. The higher the time frame, the more important it is. That fits for anything. The second thing that I'm interested in is how long it was previously horizontal. So in other words, it didn't change in value. And the longer that goes on, and then it changes, the more significant it is. So we can see that line hasn't changed for a long time. It's going off the left-hand side of the chart. So the length of time means that it's important, and it's going all the way back to what, February 16 by the look of it. So effectively, all those previous highs, when we made a high and then it came back and it came back, they weren't important. But now that high that was made in October last year is important, and so that means there's a major resistance. Because it's such a big stock and its earnings are only just over a week away, I'd be very interested to see where the price is just ahead of it, and then I'm very interested after the results come out what it actually does. So interesting that we know that level, that previous high, is important. You might want to call up Google. Google is not far off its all-time highs as well. And on that one, so you can see it there, I think the difference is, so the monthly high has done the same thing. It was a little bit, the same time effectively. And it had been horizontal for a similar period of time. So two very, very big stocks in the market, especially for the NASDAQ, and two very, very important resistances not that far away. So after a quiet week and a somewhat boring week, to be honest, it should be starting to liven up a bit.
Yeah, it's definitely compressed in time this week, so definitely expecting some moves. In terms of what the signals that did come out this week, I'll just put a few of them up. Over in Australia, we had Aluka Resources. But the background for Australia was that it had been rallying for about, I think it got up to 8 weeks, and it hit technical resistance and has been selling off since then. And this is a typical setup where we like to deal at extremes. This is a resource stock. There's a bunch of them that have rallied significantly. BHP, Rio Tinto, this one is another one. but it's come up to the final resistance, and it is also a monthly level. And we did get a sell signal there. And what's also interesting about that is if we look to the study at the bottom, last year's high at $8.20 still remains above it. So despite the fact that it had an almighty short squeeze from the October lows, it was unable to take out last year's high, at least to date. So that's kind of also a little bit of an early warning that, well, maybe this thing isn't as strong as you think. So the fact that we got a sell signal at the final monthly peak resistance up the top here was telling. So we like these sort of trades where we're selling at the final resistance. That you know, the stop and the risk is well defined. That's the pink line for everyone that's new. So if the market was to close above that level there, then we'd exit that position. But for now, the market's closed back under the resistance, which is what we like to see, and it should be an interesting week to watch that. You know, in particular, last year's close is down here at 727. We start moving under there, then that's going to open up, you know, the 670 area and possibly lower. So we're watching that one this week. Also in Australia, we had PRY.XSX. PRY, I think this is financial. Let me just check. Oh, it's healthcare, I'm sorry. So healthcare has been one of the leading sectors in Australia, along with the financials. And once again, that stock, if we analyse it, if we look first to the bottom, the green squiggly line is the daily time frame, and the orange one is the annual. So that we fell short of last year's high again. We got to final resistance, and we've got a sell signal, and the market closed under a resistance level. So that you know, kind of looks pretty good to me to go a little bit lower. Over in the UK, we had Prudential, which is a financial. Pru.Xlon. It's should have done not much. Most points done not much this week, but the logic there and the reason we took this trade is the same. We look to the bottom. We're up at last year's high. It hadn't made a new high. It had moved under last year's close. In addition, the monthly peak had moved above price, as Shaun mentioned was the case for Amazon. Well, the same things happened here, and we got a sell signal inside of this resistance level, which is what we typically love to see. And now we're obviously waiting for this week to get a decision. Now, when we look at that trade and we think about, well, you know, obviously we're wrong if the market closes above 1697. That's our protection line. We get out over that. But if we look to, you know, where the market can go underneath, we've got sort of a level down here at 1475 roughly. Probably corresponds to this level here. And then again down to 1367. So there's a little bit of room for this market to move. Other markets we had were EXPN, Experian. Shaun, what do they do? Do you know?
EXPN.
Yeah, do you know what they do?
They're a holiday. Oh no, it's no Experian. Sorry, I was Expedia. Experian. No, they do credit checks, online credit checks. You have a monthly fee that you pay. I don't know how global they are. They're pretty big over here. They branch out into personal finance. It's if you're getting a mortgage or something or a loan, they check everything for you. So
okay. Well, so the reason we took this, Shaun, do you want to talk us through why we took this trade?
Well, a similar thing. As you can see, the red line has moved to the top back in October. Hadn't been horizontal as some of the other ones, but then the thing that really happened is you can see the red line that's in the middle of the screen had been horizontal for a very long time, and that moved to the top as well. So effectively, we've got two higher time frames that have sort of matched each other. So that's created the resistance. There's also, if you look, the nearest blue line on the chart is a considerable distance away. So it's what's called space, what I call space. So again, it has some room to go. Just an important thing on the background of the FTSE. Do you know the code for the FTSE on here, or do you want to show it on?
I actually don't know what it is. I'm sorry.
No, it's really crazy. If you do CQG, then it'll... Actually,
I might have it here.
It's just something about the UK market. It's just been going up and up and up. It's a very unusual chart. We had quite a lot of volatility last year, and then what it's basically doing now is just grinding its way higher nearly every day in very narrow range. I mean, ridiculously narrow range, which means that there's no day trading going on there. Nobody doesn't appear. They've all disappeared. They've left the market for whatever reason. So it's just grinding higher, and in the professional, for the professional customer base or client base that I look after, I mentioned that on Friday, in that it was an unusual situation. We're at all-time highs by quite a long way. So what I did was I said, well, actually, what's driving the FTSE higher? So I went through the entire 100 stocks that make it up, just to have a look. And the two leaders are BP and Shell, which are both oil companies. Now, the price of oil, which we've talked about before, long term we're bullish this year. Hasn't really done much this week. Nat gas had a good week, but oil was down and then went sideways, so not much going on there. So it's not oil that's making BP and Shell go up. What's actually making it go up is the fact that the pound has been drifting lower, and so their earnings are in dollars because it's oil, and that's what led the FTSE higher after Brexit vote. So it ramped then it's sort of jerked around for a while, and now it's starting to go again. Now, the thing is, for the client base, I had the pound hit its final major support point on, what day did I go to hospital? Wednesday afternoon. So it hit the final support against the pound. Since then, and it rallied, and it gave a daily buy signal. So on the pound, I've got some positives coming out, and that has a big influence on the FTSE. So if the pound does rally, then that is a catalyst for the FTSE to sort of move the other way. So interesting to watch. FTSE is a very unusual market at the moment. So in the professional note that I put out, I was looking for a breakdown. It's not very far away. I think it's about 70 points away from where it closed on Friday. And if it closes below there, there's a lot of space because it's rallied by 300 points. There's no support for at least 200 if it breaks that level. So just watching it basically.
We might just have a quick look at the pound. Actually, we're going to use this next little bit to have an educational session on one of the studies in the software. Well, the study that we're going to investigate in this week's webinar is range deviation pivots, and I'll let Shaun talk to what they are, seeing as they're his. So, Shaun, do you just want to introduce what the concept is behind these range deviation pivots and what people should look for?
Okay. In the old days,
we've got a monthly chart here of pound US dollar.
Okay, so it's monthly pound. Originally in the pit, before we had computer trading, there was very little technical analysis. When I worked at Rudolph Wolf, there was one little Comtrend machine that used to sit in the corner gathering dust, and people would just go up and you could call up very basic moving average, maybe an RSI, and that was about it. And so what the market had was what was called pivot points, and everybody knew what they were. And it's a calculation that takes the open, the high, low, and the close from the previous day, works out various relationships, and then projects it above the high or below the low and creates various pivot points. And so everybody knew what they were. And so in the pit and in the floor, because everybody knew what they were, it was the ultimate crowd following. And so generally, in the short term, for very short term trading and day trading, then they quite often used to work. there's a major flaw in that as the world changed and it went computerized and technical analysis and the pits disappeared, all the arcades and places where lots of traders congregate still use this old technique. And it's got two massive problems. The first thing is it's no longer crowd following because there's no pits, so that's a massive problem. The second one is it's based on just the previous day's data. So let's say it's the day before non-farm payrolls, which is the first Friday of every month. It's likely that the day's range is going to be narrow because everyone's waiting for the big number. So that means that the pivots are going to be narrow for that day. Well, obviously, when payroll comes out, it's quite likely to be a big range day. So these things, it just doesn't make any sense. The other problem is that if third problem I just remembered is if the price gaps up. So what I mean by that, especially in stocks, you can actually move away from where it closed yesterday or where the high was yesterday, and you open and there's a gap there. You know, it's just jumped in price or it's fallen in price. And there was no computation to allow for that. So this got me thinking on range deviation. And first major thing that I did was say, okay, well, I'm not going to base it on the previous day's values. I'm going to base it on the previous 22 days values. Not a magic number, it's just roughly a month's worth of data. The second thing is when I compute these values, I'm going to put them on the opening of today's bar. So it means that if it gaps, it's still relevant to today. Yeah, so you'll never, so the midpoint, as it were, of the range deviation pivots, as you see here, will always be the opening of the day or the week or the month, or whatever the time frame you're looking at. Now, the actual computation also takes into account the relationship of the trend and the expansion or contraction of range. And there's a good example that Jeremy's thankfully put up here, because sometimes it's not obvious. You can see here that the pound's been going down, and it's put 1, 2, and 3 standard deviations above the opening. So you've got 3 levels, and you've got 3 below. So there's 3 lines above, 3 lines below. And it's pretty obvious that you can see that the lines below are further apart from each other than the lines above. And the reason for that is because we're in a downtrend, and also there's an expansion of range within that downtrend. So there's been a couple of big down weeks in that period. And so the idea is that when we're trending, I actually give the market room. So the third deviation down should be the limit of range for whatever the time period should be. But as the trend develops, the deviations above start to contract. And so it's easier for the market to close above the third deviation up and signal that the downtrend is over. So it's quite a long explanation there. In the first book, chapter 1 has got that, and then there's a load of probability tables in the appendix, which are actually very useful, about all sorts of relationships between how many times you can hit 3 up or 3 down in a row, what's the chance of hitting 3 up and 3 down in the same day. I put that through stocks, indexes, futures, all sorts of things. And so every now and then there's certain patterns that occur where I know that the probability of XYZ happening is like 80 or 90%, very, very high. It also applies in the professional client base who use range deviation pivots on very short-term charts. So we've got people who trade the E-mini on a 2-minute chart, and they use the 2-minute pivots to understand the relationships of bars and how the market's performing. So quite a simple study, but a deep amount of information that can be gleaned from them.
Yeah, and in this instance, despite the fact that what stands out to me is that, the market seemed bearish, the pound, and yet what we expect to see in a downtrend is that the market will fail to close above the first level up. And so if we start from this recent high, it didn't close over this first level up here, and then the next week it failed to close over this level, and the next week it failed to close over this one, and so on and so forth. But at the same time, for a market to be aggressively moving in the downtrend, it should also be starting to close under the first down pivot. And in fact, if we look at each of the first levels down under each of these candles, what it's telling what it's telling us, or telling me, is that, okay, so it's not closing up, but it's not closing down either. And this is in the weekly time frame. So that tells me the market's really indecisive. And as Shaun touched on, this is a scalable concept. So if I were to shift this up into the monthly time frame to then have a look at what's going on, we reached a limit of range. We hit the third down monthly here, and then the market closed the next month above the first level up. And since then, we've had 2 months of what could be categorized as sideways action. And I'm saying sideways, but I mean neither up nor down, because we haven't closed over the first up level and we haven't closed below the first down level. So, really we would need to see a monthly close under this 1.2 level to indicate that the pound wanted to go further down. And similarly, if the market were to turn around now and pop back over 125.20 by the end of the month, and in the monthly time frame, that would indicate that the market is still bullish. So if we switch over to the euro now, let's see what that's telling us. And this can be done from any time frame. I know through the week we sent out a couple of charts on oil, and we were using range deviation pivots, but at the annual level. And what was interesting about oil was that, for the last 5 years, the market has been trading down, not closing below the first pivot up and taking out the first pivot down. And then finally this year, the end of last year, it's popped back up and closed above the first pivot up on a yearly level. And so that's why, or one of the reasons why we're bullish oil, because of that change in the relationship of price and time. So looking at the euro now, obviously been in a severe downtrend and some consolidation over last year, and then more recently the last 6 months. It just can't close over the first pivot up, which is what it needs to do to create any form of bullish scenario. In fact, towards the end of 2016, we had a big push down. Right now, the first pivot up is at 107. We would need a monthly close over that to suggest any more bullishness in the short term. So if you do have any more questions on that, we can certainly answer them at the end of the year, at the end of the webinar. But I think going forward with the webinars ahead, we'll touch on one of the studies each week and see if we can't impart some education to you. So it's something that I use a lot. I always flick through every time frame to see where I'll start at the yearly candle, and I want to know, are we above the first up, or are we below the first down? And because if you can understand the fact that the highest time frame drives everything, then that will help you enormously with your trading. So the higher the time frame, the bigger the picture, then that's the ultimate driver of the trend. So very important to look at the highest time frame. So on that note, I might switch back to what's going on in global markets. I might just switch back to we'll start with energy. So this is a weekly chart of natural gas. Interestingly, with natural gas, just touching on those range deviation pivots, natural gas actually closed above the first up annual range deviation pivot at the end of 2016. That coincided with making a new high on an annual basis, and the market almost on the day swiftly pulled back to test support. And to my mind, the timing was impeccable. It was almost the 1st of January where this significant pullback came through. So we had a very bullish close to the year, and now natural gas has come back in and testing support. In fact, if you were to switch over to the daily time frame, we had a buy signal that came out of there.
Yeah, it was a buy on Monday or Tuesday. So it was interesting because we were slightly negative on oil, and so there's a bit of confliction. So I'm monitoring the oil and gas sectors very closely. So I'm scanning about 100 stocks there, looking for some signals to come up. Hasn't been anything yet. what I really like to see, nat gas is following the script, and oil isn't quite doing it. I'd like to see oil start to become more positive, and then that can be the catalyst to start getting involved in that sector. So watching it closely, and looking at crude and nat gas as well.
In terms of that buy signal that came up, the little blue dot there under the candle, that's a buy signal. There's a few things going on there. It obviously bounced off a trend line, but that trend line also happened to coincide with a quarterly and a semi-annual level in the study below, and these levels are the same ones that are available in Chart IQ. So we took out new highs, we bounced back into support, and we've come out of there. So natural gas for me, bullish. Oil, Shaun touched on, been pretty choppy this week. It did work around 53.89, which is last year's close. It couldn't hang on to it. We mentioned the level 52.20, which was control point, or the point of most time over the last 3 months. It looked underneath there and swiftly moved back over that at the end of the week. So short-term bias is still bullish while it remains above that sort of 51.67 area. And in terms of the range deviation pivots, we mentioned that oil, for the first time in 5 years, has closed above that first pivot up. So we have a long-term bullish view. Pullbacks are buying opportunities, and breakouts will seemingly target the $60 area and higher. For now, the short-term target to the upside is this zone around just shy of $54. So above there, can move higher, and then you've got other support around $49, which would any buy signals that came up there would probably be a good opportunity given the broader picture. What about sugar, Shaun? That's been in a very tight range around that contentious zone that we've mentioned.
Yes, that's sort of waiting. There's a few things. It hasn't quite made its mind up yet. So we're sitting right there, aren't we? We can see that you're condensed between those blue and black lines, and I don't really mind which way it goes, because whichever way it goes, it's got space. You've got the blue line a long way above, and you've got a blue line a long way below. So just holding fire there. It's a similar situation to soybeans. It's very similar to sugar in the annual macro report I write for clients at the end of the year. Soybeans was very condensed and didn't have to do a great deal to be breaking out either way, and you can sort of see those red lines there. We had the monthly crop report on Thursday. Was a bullish surprise, so you can see we'd had a couple of buy signals, those blue squares, in the period before the report came out Thursday. Was deemed to be bullish, and we followed on through on Friday. It's still got a bit of work to do to be truly bullish. You can see on both of those studies that there's levels above. It's exactly the same situation on soy meal. So watching it. Also for people, clients from last year know that I was very interested in agricultural chemical sector. So a few codes there like AGU, POT. Now POT is in a classic setup for what we like for a buy signal, and it's been very, very unfashionable. So if you're to do something like a weekly chart, it would show up even more. And you can see on the study below how everything is condensed at the bottom. Yeah, so everything dropped down, and we're sort of sitting there at the bottom. Yeah, so you've got that red line above. The time area studies are very condensed, and so if we break out, then resistance is miles away. It's all the way up at that black line, which is $36. So in theory, the target is 100% higher, which seems like a lot, but we've had some trades from last year and the year before, like X, US Steel rallied 150. We had ODPs rallied 30 or 40. Very similar setups. So agricultural chemicals, I'm very interested in. got a little bit of work to do. I already had put a position on late last year where I bought a January 18 call option, so a very long dated call, and that was actually, it was a question from Werner, one of our clients, who was asking about how do you know when an option is cheap. It's cheap primarily due to what the price action of the underlying has been. So if a stock has been doing nothing, then the mathematics of volatility drops, and so the premium drops. And so an option is cheap historically against itself, really. So, which is a product of what the market has actually done. So pot has been going sideways for well over a year. So it means that from a volatility point of view, the premiums are cheap. So that's what it means by cheap. If a market, this is one of the plays ahead of economic numbers or results on stocks. So Netflix is coming out. I might write a little piece for the clients this week and look at the implied volatilities of Netflix options ahead of the results, and they'll be crazy. Yeah, there'll be some stupid number, which means it doesn't matter what the stock does. You buying the options with 3 days to go ahead of the results is not going to get you anywhere unless there's an unbelievable result. So cheap is in relative to itself, but I'll do a piece for clients on that.
Okay, so moving back to gold, I think. Gold's interesting. In fact, I might even just quickly switch back to these pivots as a starting point of our analysis of gold this week. And I'll revert back to the other chart. So if I look, first of all, the weekly time frame pivots, off the low in gold, what stands out is at the low here, the bar prior to the low, or the week prior to the low, the market had closed below the first pivot down. And then on the final low, it couldn't close below the first pivot down. And then the next week, it closed above the first pivot up. And that is a classic use of range deviation pivots. The next week, it continued to close above the first level up. Also this week. When we come back to the other charts, it's just coming into resistance now, so it's make or break for gold.
I think the other thing there is note the last 2 weeks, the high has been the third up. Yeah, so that is always a 3 up or 3 down. It's always a reference point. Do we close above 3 up or 3 down, or below 3 down? And so I'm always very interested in that as a limit of range for the week. And so for shorter term traders, a lot of our client base use it for day trading. They will reference 3 up or 3 down for their day trading because they'll say, I'm happy to take some profits there, or I'm looking to go against the market at those levels. The thing about gold, when you look at it on the other chart, we had 1209 was the breakout point, the original breakout point, and 3 up for the week was what, 120, can't quite see it there.
1206.
Yeah, so we've got a major resistance and also a limit of range for the week within $3 of each other, and lo and behold, the higher the week is, within that range. So those understanding those limits of range, whether it's for the day or the week or the month, is very important.
Yeah, and look, if we switch now over to the monthly time frame to reference what the monthly needs to do to stay bullish, well, we can see here that the first up is around the 1190 area. So by the end of the month, we'd expect it to be holding that level for it to maintain any momentum up on the monthly time frame. So always worth casting your eye over the weekly and the monthly range deviation pivots to give you a sense of, well, is the market pausing? Is the market strong? Or where does the market need to get to keep the momentum going in that particular time frame? And as Shaun just mentioned, using it as a limit. So let's say you bought something and it hit a third up level on a weekly time frame. That would be a good place to take some profit. Just coming back to the chart itself and the outlook for gold for the next week. It is coming into a very contestable zone. It bumped up against the 1199 level, couldn't close over it. In the study below, we've got a annual level at 12.19, a semi-annual level at 12.31, and a quarterly level at 12.31, and a semi-annual level at 12.50. So gold's got a ton of work to do between 12.20 and 12.50. So in the short term, we'll do nothing until we get a signal, and that's the beauty of the software, is that we're not going to try and anticipate or tell the market what to do. When we get a little signal, then okay, we'll just have a look and see if everything stacks up. So moving along, silver's a similar story. Perhaps if we go to the currencies now, so dollar index. If we revert back just quickly to the pivots on the US dollar index, see what's been happening. Okay, it's a little bit slow tonight. So that's on a monthly time frame. The dollar index is just paused after taking out second up 2 months in a row. It failed to close over first up last month and is now testing first down around the 100 area. If we come back to the chart here, it's a very, very strong support zone around 100.4. Given that the market's breaking out, we'd be looking for buy signals off this 100 level when we get down there. Or, if the market's strong, perhaps you get a buy signal earlier than that. So to me, it just looks like a shorter time frame pullback in a broader uptrend. Any other thoughts on that, Shaun?
Yeah, it's flirting with that major support. It hasn't quite touched it. So we had that sell at the beginning of the year where that black square is. So I'm it's a little bit under pressure, but that key level is the one that really matters. So it was quite volatile. You can see that very volatile day, which was on Wednesday. That's what happens when Mr. Trump has a news conference. Yeah. So you could probably expect quite a bit more of that as time goes on. So interesting there that it rallied initially and then sort of gave it back. Yeah. So by the end of the day, the daily bar was actually pretty negative, and you can see that we've drifted lower since then. But got that key level below, and that's what I'm focusing on. Obviously, it's got to make new closing highs, get above that white line before we can say that the uptrend is truly resuming, unless we get a major buy signal at the support point. So they're the two things from a bullish point of view that we're waiting for.
Yep. So it looks like pretty critical support around 100.4, and then a lot of depth in the support, and the support is all rising, telling us that this is a rising trend. Doesn't look exhausted in any way, shape, or form. So to my mind, I'd be interested in any buy signals that pop up for further analysis. And I guess if we look at the components of the dollar index, perhaps with the yen, so yen futures obviously put on the opposite move this week, had a reasonable squeeze up, but this is a weekly chart of the yen. A few things that are interesting about this. One is this weekly blue line that dropped under price about 3 or 4 weeks ago. That's a classic support formation when this blue line changes, and then we got a buy signal the very next week. The market's been pushing up since. There's not much in the way of resistance at the minute, although everyone's probably heavily short. Immediate levels are still a little bit away. So possibly the end could put on a bit of a squeeze here. There's nothing saying it couldn't, to my mind, Shaun.
Well, yeah, on the professional client base, we've been short that from just ahead of Trump, actually, since the beginning of October. So I had some very long-dated put options, which held through that period. We've gone down a long way. And then, as you can see, it had that buy signal more recently. And so what I did, I hedged the position up. So just to quickly explain that, I've got a short position with put options. So I bought the right to be short the market. And then one of the things I like to do, I could just take the profit on the options, couldn't I? I could just close the positions out. But then what that happens is it means I have closed the position out. It's no longer active in what I'm doing. So what I did was I buy the futures contracts. And so I'm really both sides of the market. If the market goes up, then I'm sort of hedged. So my futures position is going to make me money and my options position is going to make me less. If the market goes up a lot, I could end up in the scenario where I'm actually net long the market. That starts getting a little bit more confusing. So I've got a level of, I think, 88 as a resistance point, which I'm looking at. So if the market went all the way back up, I'd actually end up, I'd have a long position, bizarrely, so I could make money both ways. Also, because of the way that works, don't get too complicated here. If we make new lows, I've still got more puts than I've got futures, so I'd actually be net short again. So I've covered all bases basically. If we do nothing, the position will just end as it is, and it will just lock in the profit. So that's one for our client base. At some point, we have had some questions about options through the week, so at some point I'll do some sessions with them on that to explain it a bit more deeply.
And two other concepts here. There's some pink dots here and then a little yellow dot down at the low. So the pink dots, we're looking at a weekly chart, but those pink dots are telling me that they're reflecting time. So it's counting how many months the market's been going up, and those dots will appear when you get to at least 7. So it was up at least 7 months, telling me it was overcooked. The market came into like a downtrend, so that was a big warning sign, and straight off the low as well, been going down for 7 weeks. And, you know, it was on the approach to last year's close, and just took off in advance of that level. So short term, no reason to be bearish on the squeeze just yet. So what else, Shaun? Swedish krona?
Not one I look at.
Bit of an unusual one, but obviously can tell a story anyway. You know, closed the year well under support. It's now back testing it probably before the downtrend resumes again. If we look at pound, we did touch on that earlier. Yeah, a few things here. It's retested the low and held there. It actually made a higher low than the original low, which is indicative of some form of support. And we touched on the fact that it hadn't been taking out bearish range deviation pivots in the weekly or the monthly level. So interesting week there. It's still sitting on a current buy signal from a daily time frame. And we'd be wrong if the market was to close back under or start making new lows. What else is there? Aussie dollar. Aussie dollar, I think, seems to have been in had a fairly vicious short squeeze up. It didn't make a new recent high. It took out the third up weekly range deviation pivot and has stalled at this quarterly level below, which was around that sort of 75 level. I'm going to guess if that was to start making new highs above this C524, might open a move to test up at this control level around 76, but no indication as yet that will do that. I think it seems to be like a sympathetic rally while the dollar index corrects, Shaun.
Yeah, I think so. It's been pretty impressive, I have to say. You know, it's probably moved. It's been the most impressive of all of them. But to me, because of that momentum, it looks like it's going to go and test the top of those ranges, and then we'll see what happens then.
Yeah, in terms of the pivots, it's taken out probably the fifth pivot up that you can't even see, but went well through the third up pivot on a weekly basis. And if I was to add in the monthly basis, well, it's on the way to the third up monthly, which would be an extreme around 75.5. So you think that might have a little bit more sting on it, Shaun? Might test a bit higher?
Yeah, I'm very interested in that monthly 3 up. Primarily, one of the things about the monthly level is what time of the month do we actually get there? Well, we're pretty early, aren't we? We're not even halfway through the month. So quite often, if you hit 3 up monthly in the middle of the month, it's got plenty of time for it to correct back down again. You know, if you think about it, if we hit 3 up at the end of the month, yeah, then of course the new set of monthly pivots are going to appear and give it more space. At the moment, that's not going to happen. So actually, I'm very interested in that level, and I will put an alert on it. It's not that far away, and so that's definitely a reference point for next week, no doubt about it.
If we come into chart IQ, we'll see that same level. So there it is there. I'm going to be interested to see if the market can hang on to that level this week, because that'll be an extreme. Okay, euro dollar. Euro dollar's been grappling with the breakdown level for the last 3 weeks. It's sitting on a buy signal off trend support. It's obviously still in a very fragile position, even though it's desperately fighting to get back above that 107. Nothing's really changed from our view from last week. It needs to close over 110 to be bullish, and certainly a break back lower from here, or any sort of sell signal from this 107 area. I think I'd be all over it. But as yet, it's not offering that up. So just got to be patient with the euro. It's been a very, very time-consuming market. You know, that consolidation pattern. I mean, you can see that consolidation pattern at the daily time frame. You see that all the time. But when you're talking about a consolidation over a year, it becomes painful. And you know, every man his dog's been short that, and it's just hanging around and hanging around. But it will turn at some stage. It's got to be patient on that one. Any thoughts, Shaun?
Yeah, same thing. I don't trade the euro too much for exactly that reason. It just seems very crowded. It's a big currency. I think the other thing that sometimes can happen, as much as you try and avoid it, is you know, if you read the newspapers and everything, then you can't help but have some sort of view about what you think about Europe, and you're either very pro it or you're very against it. I think if you're an economist or know anything about finance, you end up being against it, because it's just some monolith that consumes people's money and doesn't deliver a lot. So at some point, the debt of Europe and the ECB will happen. The market will focus on it. It's just a question of when. But the issue is we don't know when. It could be, you know, could be this year, could be French elections, could be the German elections. It could roll on for another 2 or 3 years. Who knows? So it makes it quite difficult for me to get overly involved in it. The other thing that the euro quite often does is suddenly squeeze higher. You know, people tend to be permanently negative of it because they work in finance, and so every now and then it goes on some massive rally and then kicks everybody out. So not one I trade very often. I try and avoid it if I can.
Just moving over to Australian equities. The high was downtrend line. The yellow dots are telling me that the market moved up for roughly 8 or 9 weeks. So 8 or 9 weeks into any form of resistance is always going to be a sell in my book. I did skip back to the weekly time frame, but a moment ago I had it on the daily chart and there was a sell signal there. If we look at range deviation pivots, yeah, so we're on a valid daily sell signal for Australian equities is, I guess, the bottom line. Moving over to the Dow Jones, it's going to show a sideways pattern, so not moving up, not moving down, but consolidating, staying in a tight range. Pending probably what's going to be a decent move. If we look at the study below, the orange dots are telling me the market's been up for 7 years. The yellow dots are telling me it was up for 7 weeks. So certainly from a time perspective, it's been going up for a long time. It's trapped between last year's high and last year's close. You can just see how powerful those two levels are because we have not moved one iota outside of either of them. So the close back under last year's close will be significant. You know, to my mind, if we have a weekly close under this low here at 19,750, then that will open up support, which is a long way away, almost as low as 18,400. So we've got nothing new to report on that one. You know, equally, if the market decides it wants to break out this week and start closing back over, last week's high, you can see an enormous gap up. So this is an indication of, you see this quite a lot, where just time needs to evolve before you make any decisions. So the bias would seemingly be down, but who knows? Shaun?
Yeah, I think the thing there is how condensed it is. So I don't really care which way it is. There's space either way. So just waiting to see what it does. I mean, when we talk about market leaders, you know, I already know that finance is a crowded market, so finance is what's led the Dow higher. So I find it difficult to think that that's going to do it again. So something else has to take over, and that's, you know, so if we do break out, one nice thing about the Dow is there's only 30 stocks to look at, so be able to work out what sector is leading it higher and then see where that sector is out of the 197. So a bullish breakout is probably easier to qualify than a bearish one because we can see what's leading it and whether it's got the power to actually manage to do that.
And there's the gap to support. The E-mini or the S&P 500 is going to tell you a very similar story. That's probably one thing that's been interesting this week, was that the Dow has been the weakest of the indexes, and it was the strongest out of the blocks, and now the S&P and the Nasdaq have kind of been up, while the Dow has been the weakest, sort of just more recently. If we look over to the German index, the DAX, we identified that breaking into space some time ago with this weekly closing above this trend. It's just been filling the gap. It's taken out new highs. No indication of on the weekly time frame yet of anything to the downside. The DAX is kind of related a little bit to the euro as well. Like when Shaun was discussing the FTSE rallying in sympathy with the pound selling off, typically the DAX kind of does the same thing with the euro. The week of the euro, oftentimes the DAX stronger from a global purchasing power perspective. Euro is cheaper, then money can flow into access cheap equities in Germany. Sure.
Yeah, exactly that. It's got plenty of space, hasn't it? It's a long way before we hit any resistance. So nothing standing in its way. It's interesting. It's interesting that Europe is actually doing better than America in the last few weeks.
Yes, indeed. I think the first sign of weakness will be closing the last year's close at 1144.5. But until then, looks strong. Finally, we've got bonds. Bonds has just been pushing up marginally, fairly choppy week. Gave a couple of sell signals. Shaun, you probably monitor that one a little bit more closely than me. What's your view?
Yeah, there was a sell signal last week, so it was a sell as a continuation, which is something I always get involved in. It sort of rallied early on in the week, popped higher on Trump, and then reversed and gave another sell signal. So those sell signals are all still valid. They've actually been hit with some more sell signals. It's not really developing. So my position remains small. But
what's your broader context here? What's the big picture?
well, the big picture is the trend is down. I mean, you can see that obviously from the chart. And the real paradox between bond markets, especially the American ones, is I said last week that if we made new closing highs above the resistance points, which were pretty close, it was very easy for me to be wrong because there was space for it to rally. So it did make new highs, well, the T-bond did, but the 10-year note didn't, the 5-year note didn't. And then it reversed. So it was an easy to know where I'm wrong, which is really what I like more than anything. So it means, right, okay, take my medicine, take the loss. But the big picture is down. So whenever I get sell signals, I'm duty bound to get involved, and it means normally my risk is easily defined. The lows on most of the bond markets are significant lows, so they are major support points. But they're a fair way away, so there is some money to be made if we reverse back down. But we've got to make new closing lows on all of these, and then if we do, then as I wrote in the yearly report, we can go a lot lower. There's some of these markets have supports that are very, very distant. So at the moment, when it gets to sell, I have to take it. Risk is easily defined. It's not really happening. A bit like everything, really. It's not really happening at the moment. I talked about super tankers last week, and I was hoping they were going to come out, and they haven't. They stayed in port. So
maybe this week.
Maybe this week. You just have to wait and see. But so at the moment, most things not really developing.
There's another ETF here. ETF means exchange traded fund, and essentially for anyone that's new that doesn't understand what an ETF is, what it does is ETFs typically mirror other markets. So you might have an ETF that mirrors what gold does, or what bonds do, or what some currency relationship does, and enables you to buy and sell like a stock. So that's what an ETF is. And the one we're looking at here is an ETF of the yen. So when the US dollar yen moves higher, this product will as well, and it's the code for this one is YCS. It's on the New York Stock Exchange. The thing that stands out there is that we've got a sell signal from weekly resistance, and we're now back testing a support zone. The market would seemingly be going higher in the long term, so we'll be interested in waiting for this code YCS to give us a buy signal around this 74 level. If I come back into ChartIQ, I should be able to see the same thing. Yeah, so some supports 75 and then down to 70, and last year's midpoint around 74. That'll be a critical level. So just waiting for buys on that one. I guess that's probably it on markets. If there's any questions, probably now's a good time. Shaun, are there any other questions that have come through?
No.
Okay.
We had a lot of questions in the group, in the Facebook count through the week. So people are getting more active in that area. So we're dealing with plenty of questions on there, which is good. So
it is good.
That's what we want to see. People, I always say, it doesn't matter how many times you ask the same question. If you're not sure, ask again. You're not going to think that you're silly or stupid. We want you to understand. So I don't care if you ask the same question 100 times. So very important. So, yep, I think that's a wrap. We've got an hour and a quarter. So
gone on a bit longer this week, but there's lots to talk about. I've just changed the screen to the Facebook community site where we discuss what's going on in the markets, forum for people to ask questions and have them answered and just get the feedback. So this is part of the service that we offer, so feel free to get involved. Once again, I think have a great week, everyone. Hope you've learned lots tonight. I did touch on at the start having a link there where you can leave your details if you just want to have a chat to us about what it is that we do and how we might be able to help you. Feel free to leave your details. And I guess other than that, look forward to chatting to clients on the Facebook site this week. It's going to be exciting, and looking forward to talking to new people. So have a great week, everyone. I hope it's a successful one. And that's it for me.
Yep, same here. I think I've got 4 new people I've got to get in touch base with and get them up and running. So it'll be a busy week for me as well. So have a good week, everyone. Remember earnings season, a couple of things there, financials on Tuesday. So points of interest there, but let's call it a wrap, and we'll be here again next week.
Okay, terrific. See you, Shaun.
Okay, cheers, yeah. Bye.